This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
Stocks rebound. The market bounces back from its worst one-day decline this year. And now our attention turns to technology as Intel and Yahoo both report earnings after the bell.
Strong foundation, housing starts jump dramatically, but are red flags being raised on one part of the recovery?
And gold rush. What are individuals doing now with the precious metal as prices fluctuate sharply? All that and more coming up on the Nightly Business Report for Tuesday, April the 16th. Good evening, everybody. I'm Bill Griffith in for Tyler Matheson all this week. Susie Garrett, another big day for the markets, but now we have two numbers out tonight that probably will set the tone for tomorrow.
And we're talking technology now for a change. Two tech titans with a tale of two different earnings stories tonight. Yahoo's first quarter earnings surged 36%, but at Intel, profits fell 26%. They are the first batch of technology companies reporting this week and could set the tone for trading in tech stocks tomorrow. First, let's look at Intel. The world's biggest computer chip company earned 40 cents a share. It was a penny below analyst estimates. Revenues fell 2% to $12.6 billion, slightly better than expected. But the company said revenues in the current quarter will come in higher than forecast, and so Intel shares jumped as much as 2% in after-hours trading before pulling back. Meanwhile, Yahoo earned 38 cents a share. That was 14 cents more than analysts expected, but revenues came in below estimates at $1 billion, and the company reported a drop in display advertising, disappointing investors. Yahoo shares tumbled more than 4% in after-hours trading.
And on the heels of Intel's and Yahoo's mixed results, there's another technology giant set to report next week, which may reveal more about the shift by consumers to mobile computing and the health of the tech sector as a whole than any other company. In tonight's installment of our series Earnings Spotlight, John Fort tells us what investors are expecting and hoping to hear from Apple.
If there's one tech company to focus on this earnings season, it's Apple.
It's an important quarter for the iPhone and iPad maker. Of course, investors would like an increase to the dividend. Now it stands at around a 2.5% yield. They'd like something closer to 4%.
The stock is trading near its lowest level since the early days of 2012 because of worries that the days of dizzying sales growth and profitability at the company are over.
Yeah, expectations for the March quarter keep ratcheting down because we are in the middle of a product refresh vacuum, right? But it's not only the March quarter that investors are concerned about, they're concerned about the June quarter, right, which may show even more signs of a slowdown as the existing iPhone 5 and iPads start to show some age and in front of the next launch of those products.
Apple has already poured cold water on Wall Street's hopes for surprise upside, saying sales will be up 5 to 10% to around $42 billion. Margins will be down. And unlike in the past, this time management promises those projections will prove accurate. A key storyline to watch with the stock, PC versus mobile. PCs are under plenty of pressure with shipments down nearly 14% in the first quarter, according to IDC, as consumers opt for phones and tablets instead. Just ask people how often they're buying a new home computer.
Never, because I have a Mac. So, and as far as my Mac goes, I mean, I have iPad and a lot of tablet handheld devices. So those, I mean, we get new rounds of those every couple of years, but no PC except at work.
I think I use my iPad more than I use my computer, almost to where it's almost obsolete in a way, to where I don't even touch it. It's almost pointless to have one almost at this point.
Bottom line, investors are looking for a reason to continue believing in the surprising stock market rally we've seen so far this year. Optimism from Apple would go a long way. For Nightly Business Report, I'm John Fort in Cupertino.
Joining us now to talk more about those earnings from Intel and Yahoo and the outlook for the technology sector, Josh Spencer. He's portfolio manager of the T. Rowe Price Global Technology Fund. You know, Josh, looking at Intel and Yahoo, the one thing that ties them together, these are about two companies trying to reinvent themselves. So I have two questions for you. In the case of Intel, does it have what it takes to reinvent itself, to jumpstart the company? And in the case of Yahoo, is Marissa Mayer's turnaround strategy working?
Well, thanks for having me on. It's nice to be with you. And you hit the nail on the head. Both companies are reinvention stories. In the case of Intel, they start with a strong suit with their manufacturing. They're actually a world-class manufacturer of semiconductor chips. However, the segment that they sell into, the PCs, is under a lot of pressure. I smiled at the interviews in the Apple segment leading into this. People just aren't using their PCs as much as they did in the past. So I think Intel does have what it takes to turn around eventually, but it'll be a slow process to establish themselves in the smartphone and tablet market. Yahoo's also going through a turnaround, and what we saw this quarter was not much evidence of a fundamental turnaround in Yahoo's business, with revenues actually down a little bit year on year. So that one's still on the come as well.
Are we really going to come to a time where we just don't use PCs anymore? I mean, I know we're migrating to these mobile technologies that we all use, but will we come to a day when we don't use PCs? And who, in your opinion, is better positioned in that regard, Intel or Yahoo?
Well, in that regard, Yahoo would be better positioned. I think it's an exaggeration to say we won't use PCs, but we'll use them for a lot narrower applications. So we might use them at work for spreadsheets, but at home we'll pull out that tablet or that smartphone if we want to check the internet or stay up with video or news. We just will use PCs less and less in our daily life. Yahoo has a better chance to make that transition. Intel, it's establishing themselves into a whole new realm.
Josh, I want to ask you about Apple. You heard John Fort's report on it. Everybody is looking forward to that report, earnings report next week. I know that you are a believer in Apple, but make a case why investors who have lost some faith in this company should take a fresh look at Apple.
Well, we all love Apple products. The customer that you interviewed, that sounds like my house at home. We have Macs, we have iPads, iPhones. We have a 2-year-old and a 5-year-old who love using those iPads, maybe too much. The products are very intuitive. They have a great software ecosystem. We've come to expect innovation from Apple, and I think we will continue to see it in the future. You know, just because they've gone through a little bit of a lull here, let's not throw the baby out with the bathwater. It's easy to forget that Apple has been generating tremendous profits and has over $130 billion of cash on their balance sheet today.
Right. It feels, though, that the innovation has been more incremental than transformational, as we saw during the Steve Jobs era. What do you think the next big thing is from Apple?
Well, it's hard to say. I think they're going to continue to innovate around the iPhone and the iPad products. I think we'll see thinner iPads, and I think we'll see larger screen iPhones and new features like fingerprint sensors. Of course, we've all heard the talk about Apple working on watches and TVs. I think I would buy an Apple Watch if one came out. I think there's a lot of people into fitness who would use it in the gym or while they're jogging outside. And of course, there's many people who would buy an Apple TV at home to solve the nightmare problems that we have with our cable box.
Okay. Josh, do you have any disclosures to make on Apple, Intel, or Yahoo? Do you own any of these stocks?
Apple is the largest position in the fund that I manage, and we do own Apple personally in our family as well.
All right. Thanks so much. Josh Spencer, portfolio manager at T. Rowe Price Global Technology Fund. Bill?
Well, the markets rose sharply today, gaining back more than half of Monday's big losses. The Dow was up 157 points when all was said and done, ending the session at 14,756. NASDAQ up 48. The S&P 500 added 22 points. Stocks got a big boost from a round of solid economic data reports and stronger than expected earnings before the bell from Dow components Coca-Cola and Johnson & Johnson. As for that data, inflation is still in check. Consumer prices fell more than expected last month, driven lower by a 4% decline in prices at the gas pump. Also helping, industrial production was higher than forecast in March, with U.S. automakers churning out more new cars and trucks, and utilities generating more heat to combat a nationwide cold snap that we all suffered from last month. And there was more good news in housing. Construction of new homes shot up by 7% in March, enough to reach an adjusted annual rate of 1 million housing units for the month, something we have not seen in 5 years.
Well, Bill, that jump in new home building that you just talked about helped send shares of the nation's biggest home builders higher today. Pulte Homes rose more than 4%, Ryland up 3.5%, D.R. Horton, Toll Brothers, and Hovnanian all seeing gains. Now, much of that surge in construction was not single-family homes, however, but multifamily rental apartments. It's a sector that's been growing rapidly over the past few years, and now there's concern about a backlash in all those rental units that are hitting the market all at once. Diana Olick explains.
As the market for single-family homes recovers, a curious contradiction swings overhead. Cranes high above construction sites of multifamily rental apartment buildings. Thousands of new units are going up, just as demand for rental apartments could soon be coming down. Multifamily starts rose 27% month to month in March and are up 82% from a year ago, running at an annualized pace of 392,000. Compare that to the 10-year historical average of 238,000.
A year from now, will we be seeing much stronger headwinds for the space? Potentially. The supply trajectory clearly is changing. Mortgage credit is clearly loosening. If we stay in the current pathway, I would expect that demand will be diminished somewhat.
The numbers don't show it yet. Apartment vacancies fell in the first quarter of this year to 4.2% nationally from 5% a year ago. That pushed rents higher by 3%. Despite sluggish job and wage growth, renters are still willing to pay these higher costs. But the question is, for how long, especially as confidence comes back to single family.
It takes about 2 to 3 years to put up an apartment building, so with all these new starts over the past couple of years, we're about to see a big surge in supply. And that just adds to investor fears already weighing on apartment REITs.
What we've seen in the multifamily REIT space for the last couple of years, certainly last year and this year, has been relative underperformance to the rest of the REIT market. A big part of that has been fear around supply. There's a bigger concern around rental growth as well. Supply ties into that.
But real estate is still all about location, and developers in prime urban areas claim the market is hot, but not overheated.
No, we're not concerned about any of that. I think the market is ripe for us to take advantage of the locations that we are.
More than 100,000 new apartment units are set to open in the latter half of this year, with an even stronger surge set for 2014. For Nightly Business Report, I'm Diana Olick in Washington.
And that's how our system works, where there is one area that suffers, like the housing market. The rental market is very hot right now, and that's not lost on these builders.
Remember the whole American dream of owning a home? That may be changing too. Just psychologically, Americans want to rent. It's easier.
And they're doing it in big droves right now.
Still ahead on the program, the gold rush is all the volatility causing individuals to hoard or unload the precious metal. But first, let's take a look at how the international markets closed today. As we mentioned earlier in the program, strong earnings from two Dow components helped set the table for today's market rally. Coca-Cola's earnings and revenues topped estimates thanks to strong sales volume in the U.S. and worldwide. And Johnson & Johnson also reported better than expected earnings on sales of newer medicines. Investors bid up Coke more than 5.5% to $42, and it was leading the Dow gainers. Johnson & Johnson gained more than 2% to $83 a share.
Meanwhile, two financial services giants, Goldman Sachs and BlackRock, reported strong quarters. Goldman's profits was up more than 7%, while BlackRock's was up 10%. Goldman's chief financial officer said that clients were more cautious in March because of Cyprus and other uncertainties, while BlackRock's chief executive officer said new business during the quarter was indicative of positive momentum. BlackRock gained more than 1%, while Goldman Sachs lost nearly 2%.
Shares of JCPenney jumped 5.5% today on a report that the troubled retailer is considering ways to borrow against its real estate by issuing debt. Besides its retail stores, Penney's owns warehouses, distribution centers, and other real estate. JCP closed at $15.19 a share.
And Whirlpool announced a 25% dividend increase, saying that it expects to sustain growth. As housing recovers, all those new homes, of course, are going to need appliances. Whirlpool also sells KitchenAid and Maytag products. Whirlpool shares have gained almost 65% in the past year, and they were up better than 3% today alone.
And one of the stars of today's market was W.W. Grainger. It sells equipment and supplies to other companies and institutions. Grainger's first quarter profit improved by 13%, and that's thanks to strong sales growth in the U.S. Grainger led the S&P 500, gaining 7.5%. That works out to $16 to $241 a share. And gold prices regained a little bit of their glitter today, up $26 an ounce, but that's coming off the biggest one-day drop in prices in 33 years on Monday, with prices falling $140. So if you own gold, even some old jewelry you're thinking about selling for cash, you may be wondering if now is the time to sell. Jane Wells takes us to a California company where volatile prices for gold and silver are creating a rush of customers.
We have 23 kilos and 165 eagles.
It's late afternoon at California Numismatic Investments, where customers are furiously buying or selling gold and silver. There's a line out the door.
Volatility, like I said, brings them in because they need to act now.
Ken Edwards is a partner in the gold dealer just down the road from LAX. Business is up as gold and silver prices are down.
Up until the recent drop, which is, you know, the end of last week, beginning of this week, I would say that we were definitely selling more, especially silver.
You were selling?
We were selling more, okay? Now that's really balanced out. We've seen more sellers come in the market in the past couple of days.
One man who did not want to talk on camera was selling more than 1,600 ounces of gold while we were there, but most of the people were buying. John Garton is buying silver at the moment and is waiting to buy more gold.
Obviously, it'll go down maybe another $100, and then it will start its way back up.
At this facility, they will buy American Gold Eagles for about $25 above the spot market price for gold. They'll sell them for about $75 over. As for silver, they buy at about $1.25 above the spot market, and they sell for $3.25 over. But they don't have much silver to sell at the moment. Most of the business here is done through the mail, but about 20% is conducted in person. And CNI's 18 employees are busier than normal.
When there's big moves, lots of volatility, that tends to get people to act right away. They don't want to wait till Friday because the market might be completely different.
And here, no matter what's happening with the price of gold, they're making money. For Nightly Business Report, Jane Wells, Inglewood, California.
The tricky thing about selling jewelry is that it's just for its weight, not for the design or any special stones, but it is a gold rush.
That numismatic quality, exactly. I mean, we're definitely in the midst of a gold rush again, that's for sure. All right, coming up, the business of protecting big events and the cost to keep you safe. But first, more on how commodities, treasuries, and currencies fared today.
Brace yourself for even slower growth around the world. 3.3% is the new global economic growth number from the International Monetary Fund. It lowered its outlook by 0.2% today, blaming steep federal spending cuts in the U.S. and the deepening debt crisis in Europe. The IMF also trimmed its growth forecast for emerging markets and cut China's growth to 8% from 8.2%.
Well, certainly a slowdown in GDP in China got a lot of the blame for Monday's sell-off on Wall Street, but Ford doesn't see it that way. The automaker is predicting that 40% of its global sales will come from China by the end of this decade. The company, as a result, has doubled its capacity there, scrambling to keep up with demand in the world's largest automotive market. Phil LeBeau is in Chongqing with a closer look at Ford's rapid expansion there and the challenges it still faces.
Shugao Li is part of the new wave in China. Car buyers turning the western part of the country into one of the hottest auto markets in the world.
In his mind, he feels that this car, the brand is good and the service is also excellent. So this is why he trusts this brand.
Here in Chongqing, the gateway to western China, growth in auto sales is particularly good news for Ford. At this plant, a new Focus or Kuga rolls off this assembly line every single minute. And within 2 years, Ford will be doubling capacity in this area.
This year, the total volume of Ford will achieve almost 600,000 volume. So it's a big change.
Growing sales in China has been one of Alan Mulally's top goals since he took over Ford in 2006. At the time, Ford had a small presence in China, while its rival GM led the market thanks to Chinese buyers loving Buicks. Mulally immediately began investing billions in China, quickly ramping up production. China now generates 11% of Ford's global sales, with the Focus leading the way.
To have the Focus now just be announced as the #1 selling vehicle in the world and the #1 selling vehicle in China, what a proof point about the Ford strategy.
While Ford is surging in China, it is still barely a blip in the rearview mirror of the market leaders.
The dominant players here are, of course, Volkswagen, General Motors. Hyundai is a story as well in terms of how well they've done. So Ford is still behind, but coming on strong.
Running hot in the world's hottest auto market, where buyers are embracing the blue oval. Phil LeBeau, Nightly Business Report, Chongqing, China.
In many ways, China is about 50 to 60 years behind us in that they have this very large growing middle class in their country, and it is a sweet spot for companies like Ford and General Motors.
They're going to turn in their bicycles for cars.
Yes, ma'am, they are.
And a lot of them.
Yep.
Our series from China continues tomorrow with a report on what doing business in inner China is really like for American companies.
In the meantime, from expansion on the roads to trouble in the skies, American Airlines and its regional carrier American Eagle grounded all flights today after a computer outage at its reservation system. About 900 flights were directly impacted and another 800 were affected by planes and crews not making their destinations. American now says that its computer problems have been fixed and all flights will resume this evening, but to expect a lot of delays before things get back to normal.
And speaking of getting back to normal, finally tonight, after the deadly bombings at the Boston Marathon on Monday, many Americans are worried about enhancing security measures at any public event. At what's likely the first high-profile gathering since the Boston tragedy, officials acted quickly to ensure the safety of a concerned public despite the added costs. Eamon Javers has more from Washington.
There were marching bands, colonial pipers, and soldiers on parade instead of on patrol. It hardly seemed like a day after a major terrorist attack as the Emancipation Day parade continued as planned right down Pennsylvania Avenue today. Officials said they were going to maintain a very heavy security presence here at the Emancipation Day parade in Washington, D.C. It's not a lot of visible security here. The normal police presence is out and about here in Washington, but the folks we've talked to here today said this was an important day to come out and they were not going to be afraid.
I mean, it's a pretty safe place to be at this point.
How do you feel today?
I feel pretty safe. I do.
It's the 151st anniversary of the signing of the Emancipation Proclamation, and times were a lot scarier and tougher back then, and people, stood for what they believed in. I thought it was an important gesture to come out here and support this.
These spectators are determined to go on with life in America today, even as the Senate Republican leader warned that Americans have let security grow lax.
The complacency that prevailed
prior to September the 11th has actually returned. And so we are newly reminded that serious threats to our way of life remain.
But securing the big events that America loves is an extremely expensive thing to do, whether it's in Times Square or New Orleans. The NFL spent $6 million on security for the Super Bowl this year, and President Obama's first inauguration came with a $124 million security price tag. And there's no guarantee it will always work.
My sense is, for something like this, you couldn't possibly have frisked everybody in Boston before the marathon or looked in every trash can everywhere.
No matter what security officials do, life and the parade will go on. For Nightly Business Report, I'm Eamon Jaggers.
And that's it for us, Nightly Business Report for tonight. I'm Susie Garrett. Thanks so much for watching.
I'm Bill Griffith. Have a great evening, everybody. We'll see you tomorrow.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our Dividend Stock Advisor guides and helps generate income during a period of low interest rates. Options Profits helps educate beginning and seasoned options traders. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media, we are TheStreet.com.
I'm Susie Garrett with the Nightly Business Report News Brief. The markets gained back more than half of Monday's losses after a round of strong economic data and better than expected earnings from Coca-Cola and Johnson & Johnson. On Wall Street, the Dow shot up 157 points, ending at 14,756. The Nasdaq up 48. The S&P 500 added 22 points. And gold was up $26 an ounce. Construction of new homes shot up 7% in March, enough to reach an annual rate of 1 million housing starts for the month, something we haven't seen in years. And consumer prices fell more than expected last month, while industrial production was higher than forecast. American Airlines canceled nearly 1,000 flights today after a computer outage at its reservation system, but now says all flights will resume this evening. Be sure to tune in to Nightly Business Report right here on your public television station.